Good evening, everyone. Time for another silver update. Now, let's go through today's action. I think today's action is another indication that the disconnect is starting. This is part 2. Apologize because the video cut off. But it's kind of good because we get to see the other side of this. Now, this began this morning with a similar pattern that we had before with that big sell-off that came at 12:30 a.m. But what happened this time was that it started to go down into those new lows, and you can see that price. If we'll go right under there, you can see under that candlestick, the low is 1505. That's what we hit, 1505. And then we got a little bit of buying coming in. And then at 1:30 a.m., we got the big rally from about 1508, and it rallied to about 1533. Now that was big, but nothing like what happened at the open 8:30 a.m. And for the first time in a very long time, we saw a textbook buy pattern emerge. Now I call this textbook because you can see the mirror image of the volume pennant and the price pennant. This is what you see in bull markets. You see some realization, some change in sentiment, some massive buying coming in, and then a sell-off, and then a reaction, etc., as we begin to approach that price. Now that is very interesting because that happened to coincide, as we see when we go over to the Zero Hedge article, that actually coincided with the silver halt. Here's a tweet from Eric Scott Hunsader at Nanex. Okay, and Nanex are the guys who watch the algos and keep track of stuff in real time. And these things move very fast. Nanex has down to the microsecond they watch these things. But you can see the halt there. You can see the explosion in the silver price at that 8:30 a.m. Right after 8:31, boom, you get that huge volume coming in. A massive move in the price, and it started to fall off, and they halted it. And you can see the time it spent there, 02, all the way through 12. There's a 10-minute halt. And then you can see the price start to fall off. So that's what we see in this chart here. And then, of course, we get the move up to test those old highs. And the initial test there, and a sell-off, another test, a breakthrough there, a little sell-off, minor breakthrough, and we've closed. So we're looking for Sunday night's open. Now, I have seen these pennants violated in the past. I've seen them gap down to here. They could pull something out of their hat. I don't think that they're going to. Actually, I would say my best bet is there's an 80% chance of a gap up out of this in the beginning of the Sunday night session. Now, the reason I say that is because of the volume. And I've said for the longest time, we're looking for the right shoulder volume. And I told you when we had this massive volume on the downside, well, actually, that goes back to the Boston bombing one. But you can see now that it appears that the recent activity is actually a right shoulder volume to rival what happened there. Now, let's go in close and look at these, because the one that we saw a few days ago came very close to getting near that 20-something million volume. But you can see today we did that. We got the 20-something million. We didn't exceed what happened on that one day, which was 21 plus million, but we did have 3 days in a row where we had 18 million, 15 million, and now today we got that 21 million. Now, this doesn't look like a candle spike that you normally see on a huge turnaround. We don't have the size of candlestick that we normally see, nothing like this candlestick. But then again, we have to look in percentage terms because we're at such a low price. Now, we do have 3 days with these candlesticks. And if we pull out to, say, the weekly, we don't know how this is going to form, but you can see that the weekly volume here comes in higher than we've ever seen. That's the highest weekly volume we've ever seen by a significant amount, coming in at 64 million contracts. I don't even want to think about how many billions out. 300 million ounces? I don't even know. Ridiculous. So, and you can see also a trend for the first time. No one would have really guessed that this thing would have made a trend based on that massive volume. But you can see that in fact it did. It made a trend there. So is this the reversal? Well, like I said before, I believe there's about an 80% chance that we're going to gap up on Sunday night. I believe there's an 80% chance that this is the bottom. The bottom has been put in. I think one of the big keys to that is going to be the fact that the mint halted the Silver Eagles, and that is absolutely unprecedented. It's my prediction, it's my guess, I don't know if I'm going to be right, but it's my prediction that they're actually going to be halted all the way through the middle of January. And if that's the case, then we're talking about 2.5 months, and we're talking about nearly a quarter of the time of the year where they're not available. Now, I may be wrong on that, and the price may significantly rise from here. It's quite possible that we could get a tremendous rally from here, and the mint could come right back online. I don't know if this is a planchant issue or if this is an issue of them just not being able to crank them out. So I don't know the answer to that question. But I'm going to make a prediction here that there's an 80% chance that this is the bottom, and there's an 80% chance we're going to gap up Sunday night. So what does this halt mean? It's very important because we haven't seen one of these. I believe it's unprecedented. Now, the rules on commodities are very clear about halts, and they are daily halts, and they have to do with a percentage move. Those things are adjusted based upon the price. Normally, the Comex, the CME, they put in those daily limit moves, but this isn't that. One of the reasons is I believe it's an hour halt, and this is a 10-minute halt. This actually, I think, is what it appears to be, is the algos and the computers freezing up and them halting it because of the just craziness of that. So that's a big issue, the fact that they had to halt it. Now, how many people are taking long positions here, and what does that mean? If these numbers are even close to being correct, and I have no idea if these numbers are correct or not, but if we have this many people taking the other side, if we have this many contracts outstanding and have turned around and gone long, and I would have to say that a lot of this may be selling volume, and maybe people who were short will know when we see the open interest figures on this. But whatever it is, there is a tremendous position now established that has gone long. Now, you could have said that back here at the Boston bombing smackdown, tax day takedown. But you can see the rally and then the subsequent sell-off. It seems that those were liquidated with newer lows. But here, if we get this move, if we get a move up like that, how many paper longs are there going to be? How much silver can they deliver? How much can they demand? If there are that many outstanding contracts and they actually decide to take delivery, we know that even a small percentage, relatively speaking, of outstanding contracts, if they stood for delivery, it is game over in the silver market. So there really is a potential chance that Harvey Organ could be proven correct here. That this reversal is the reversal, and if these longs stand and they stand for delivery, they want their silver, it is game over. We could literally see a $200 price for silver by next year. That's what I believe what Harvey Organ predicted. Now, as far as the physical market, I don't see it being nearly as tight as what I saw in 2008 when things just weren't available. This is not the kind of shortage that I saw back then. But it is starting to shape up something similar to that. You can see here on APMEX the 100-ounce secondary market bars, they're out. And another thing that's kind of interesting here, you can see the print there of silver $15.78. But you can see down here APMEX buy price at $1,598. So you can see that APMEX is buying silver bars at a $20 premium above the silver price. So let's take a look at some of the other 100-ounce bars, and this is going to be the one that is the cheapest because it's a generic secondary market one. But you can see they have 6 of the APMEX bars, but those are all the way up at $17.27. You can see the Republic Metals, we got 17 of those at $17.37. You got 127 of the APMEX stackable IRA approved bars. So we do have a significant amount of 100-ounce bars that are quite a bit higher than the price. But the fact that APMEX is willing to buy secondary market bars for $20 above spot, that's another indication that perhaps this is it. The bottom is in. The disconnect has happened. They've pushed it too far. I don't know who these people are who have taken all these long positions in the paper market. Maybe it's the Chinese. Maybe it's the banks who have shorted silver for the longest time and flipped now and have gone long. We won't know until we get the open interest and until we get the delivery notices for December to find out who's going to take delivery. Now, if it's true, and remember, these are worldwide figures. These aren't just Comex numbers. So these are volumes from all around the world. But if a large enough percentage of them decide to take delivery on the Comex, it's been my opinion for the longest time that the Comex will just simply close down shop. And they will say that we're settling in cash and we're not going to allow delivery. Now, there have been a lot of anecdotal stories, and none of us know if these are true except the people who were involved. We've had a lot of stories about people who bought mini contracts of silver or full contracts of silver and gave notice for delivery and got a mysterious phone call saying, "Are you sure you want to do that?" Or, "Why are you doing that? What do you want this silver for?" We've also heard anecdotal stories of people who gave notice for delivery and got a mysterious phone call saying, "We'll go ahead and offer you 10 or 15% cash above the price to go ahead and settle in cash." So we don't know if those stories are true, but if those stories are true, then it's quite possible that they will have to be forced to settle in cash. Now, if you remember with the Hunts back in 1979 and 1980 when they had that tremendous crisis, because the Hunts, although they had levered themselves in the paper, they also had quite a bit of physical, and they had to change the rules of the futures market. So basically they changed the rules saying that you can only sell, you can't buy. Well, if you have your market where they make a rule that you can only sell and no one can buy, it's pretty clear that the price is headed down, and that's exactly what happened. So is the Comex going to change the rules? I don't know. But if they do, it's the end of the Comex. That's essentially a default. That's an announcement that they don't have the silver and they can't deliver it. And this is no longer a market where people should seek to buy silver. It's just a market where people should seek to trade fake paper silver and computer-driven contracts. So that's what's happened today. Again, this is a tremendous disconnect in my opinion. adding together the fact that the mint ran out of Silver Eagles, 2 million in 2 hours, and that somebody, we don't know who, has taken an enormous historical position long in the paper silver. We're looking for some serious fireworks going forward. We're going to watch it opening Sunday night. Now, I've pretty much finished my buying for this round. I didn't buy as much as I bought at this bottom, but again, I think we had quite a long time here. If you look at the rounded bottom that we had there was a lot of time for people to pick up silver. There was actually a lot of time for the premiums to kind of settle, and that tends to happen when you get tremendous price drops, and the dealers, whether they be local coin shops or the others, they have to settle in their prices. They have to decide, if you're running a local coin shop, you have to decide if you're going to go out of business or not, because if you're not willing to sell your silver, then why are you in business? So as they can source more, the slow rounding bottom gives you the opportunity to get things cheaper as things settle out. I don't think that's going to happen this time. This appears to be a sharper spike. Again, we're looking at the weekly right now. On the monthly, it's not that sharp of a spike, but for percentage-wise it is, but the volume is a very sharp spike. So it's quite possible that this could run very rapidly. You can see how rapidly the market ran when it broke out on the 2010 QE2 announcement. It's quite possible that we could have a run that is that fast. And my guess is that if it starts to run really hard, you're going to see people pile into the physical a lot more than they have, because there's going to be a lot of people who've said, well, yeah, I thought it was going to 10, I thought it was going to 9, I thought it was going to 5. They said it only cost 5 to mine it. I thought it was going below 15. I thought it was going lower, but look, it's rallying. I better buy now, because I better buy before it's too late. So very exciting stuff going on. The volume is unprecedented, and we're going to watch it open Sunday night live, and we'll talk to you next time.